the Divorce Planner is all about helping you prepare in advance of divorce so you save time and money, make smart choices, and really create the best next chapter of your life. Part of that, aside from the one-on-one coaching I offer, as well as the digital tools, is all of the resources I provide you, getting to know different professionals that you should have an awareness of as you go through the process. My guest today is one of those people. Josephti Cruz is a financial advisor who has a very long and very impressive history. In addition to being the founder of her own firm, the Wealth Garden Financial Services, she's also worked at TIAA Craft, Chase, and Morgan Stanley, to name a few. And she currently oversees over $100 million in client accounts. So clearly doing quite well. And she is my go-to person for all things retirement. So I just kind of teed you up of what your experience is. And look, the Divorce Planner, I'm here to help you during this time of big transition, big fear, and big unknown, which is why I do what I do. And so I'm just going to kind of jump in with Josephti. If you have a question about divorce prep, retirement, financial planning, again, feel free to drop it in the chat. But here we go. So my first question, Josephti, is, what are the steps that people should be taking to financially safeguard their retirement before and during divorce?
It's funny. I think the answer to this is similar to just prepping for divorce in general, which is what you always encourage people thinking about divorce to do, is create your baseline. What do you have? What are all the different, I call it Legos. What are all the Legos that we have to work with here, and find out what they are, right? So where are all those accounts? Where are all the credit cards? So it doesn't have to just be your IRA or 401k. It's every asset.
Yeah.
You can use every asset towards retirement potentially. So what's the value of your house? Do you have that mortgage statement? Do you have the 401k statement for both you and your spouse?
Mm-hmm.
And just collecting all that information and understanding, as a couple, what are all your assets? Mm-hmm. And that's really the first way you safeguard, because if anyone starts moving money around, you have evidence of what it used to be before this money started moving around.
That's great advice. Yes. And I'm all about getting on top of your financial realities. As you know, for anybody who's joined us who's like, I don't know where to start, or my spouse handles everything, I don't know how to calculate anything to do with that, or what I should be looking for, head over to my website. I've got a digital package, what to gather, as well as a monthly budget calculator. It walks you through what to do, just to make it super easy for you. It's interesting what you were just saying about the kind of being aware financially so that you can see if anything's been moved around. And when it comes to retirement assets, especially a 401k or a SEP IRA, or perhaps a pension, there is usually a good paper trail, right?
Mm-hmm.
And to do that, some of the paper trail that I'm always talking to clients about is what you had before the marriage, right? That's really kind of something important to make sure that you earmark and that you bring it up, because that amount, whatever it is, should be outside of whatever is being divided in terms of assets. And I think people forget to do that. And I don't think people get dinged unless they're talking to, a divorce prep coach or a financial advisor on that. So hopefully that's something we can avoid somebody doing today.
So it's funny. I was just talking to a client about this about a week ago, because she had done a great job accumulating all these statements and finding out what all the, all the different accounts were between her and her husband. And then I said, okay, so which of these accounts existed before you got married? So she did point out which ones. I was like, okay, now that you've done the easier part of accumulating statements today, let's move on. This will be a little bit more tedious, but it might be worth it. Go back to that provider, to the IRA provider or whatever. Let's see if you can find the statement, the month before you got married, and furnish that, because then you're showing evidence of what was separate property potentially, before marriage.
No, it's such a great point. And for the most part, these financial institutions have all the paperwork that dates back, because they have to have accountability for different amounts at different times, who gave what. I've even researched a 401k I had had 10 years prior to marriage and didn't have the information. The name of the company had changed, contacted the new company. They still were able to get me all that information. It took a beat. It wasn't instantaneous. They had to mail it through the mail. It wasn't available online. But there are ways to do this on your own to make sure that you are protecting the assets you brought into the marriage as well. So actually, that's a really nice natural transition into my next question, which how does the division of assets from a divorce settlement impact somebody's retirement?
Well, the division of assets, and again, it's something that you talk about a lot, Alex, that it should be equitable, but not necessarily equal, right? So yes, one can go through a very simple divorce and just split everything in half. Or, you know, some people fight for the house in exchange for everything else, but it just depends which assets come to you and what you can spend for retirement, right? So for example, if someone just emotionally wants to keep the house and gives up all other assets, then what are you going to use to A, pay for the house, and two, what are you going to use to spend in retirement, right? If you're living in your only assets. So you want to make sure that when you're doing these negotiations, you treat it like a business transaction. Somebody very smart told me this once. That you treat it like a business transaction and you make sure, like, okay, what are my priorities? I'm getting close to retirement.
Yeah.
What is going to be at my advantage here and fair, right? Within all the Legos that we've collected, right? And then you can come up with a way to equitably divide it up so that, you know, hopefully no one is screwed and everybody can retire. Right?
Oh,
but you're thinking of yourself as number one now. You're not a couple anymore, so you're watching out for you first.
Yeah. And that definitely can take practice, especially if you're coming out of like a more long-term relationship. And I think that there is a stigma that we have about like, oh, I'm trying to get one over on the other person. You're not. You know, you have to go into this process really being very specific about how are all these decisions going to affect me. The other person is doing the same thing. And, you know, Josephti, you said the buzzword, which is like, how can we make this fair? The truth of the matter is in the legal, you know, world, that's the F word. The word they always go by is the E word, equity, right? So equity is the name of the game. And what feels fair to one person can feel very fair to the other person. But even going through what your plan is with regard to settling up when it comes to retirement accounts. And as Josephti pointed out of like, okay, I want the house. What am I willing to kind of exchange that's of equal value? So when you're doing something like that, I want you to really pay attention to the value of the dollars that you're talking about, right? So if you're talking about a house, it's like what has been paid down, what's the equity in the house, what's remaining balance, what are the ongoing costs associated with that house. So be really detailed. I have a post on my blog about if you want to keep the family home, 4 questions you need to ask yourself. Please head over there and check it out. It's really detailed. And then if you're talking about splitting up retirement accounts, you know, the value of $1 in a retirement account is very different than the value of $1 in a regular savings or a checking account, right, Josephti?
Yes. Yes. So in a pre-tax retirement account, for example, like an IRA, 401k, 403b, those are what you call pre-tax dollars. So before you're 59 and a half, if you were to withdraw from those types of accounts, not only would you pay income tax on the amount that you're withdrawing, you're also going to pay a penalty, a 10% penalty.
Yeah.
Even if you're,
that's big. That's big.
It could be 50% for some people.
Yeah.
Right? So that's a lot. And that's going to be less valuable to you than the same dollar amount from a different account.
Yes.
Right? Even if you are of retirement age, which is defined as 59 and a half, you still have to pay income tax on that money. So that has to be factored in when making those division of assets. Plus, if you have something like a pension, which is more of an income stream versus an asset, there are special things that go into negotiating that, right? So if you're thinking of maybe letting your spouse keep the pension in exchange for you keeping something else, that has to be valued as an asset somehow. It has to be calculated, and you'll have to go to a specialist, like a certified divorce financial analyst or forensic accountant, like people that know how to do that.
Yeah.
to come up with like an equivalent asset value
Mm-hmm.
so that you're able to, compare apples to apples. Because right now it's a pension and a 401k are kind of apples to oranges.
Yeah, that's very true, especially when it comes to a pension. There's usually a quadra specialist that comes in, and the findings and does a report that's included in your judgment, because it is a future projection, and they're also they're kind of stopping the clock on during the time of the marriage. Here's what was earned in the pension, and that's what we're dealing with. So then whoever's the primary on the pension continues to building, and then they can freeze that other for the spouse that might be sharing it with. So it is a little bit more complicated. That's not a very expensive, I will say, for people out there, hiring a quadra expert, which is somebody that your divorce attorney or mediator will hire, because they kind of go through, they're a neutral third party. They're working for the divorce. They're not working for either spouse. And that's the same with a forensic accountant as well. They're very much like by the book. And actually, I have a great conversation on my website with a forensic accountant for anybody who's interested.
Mm-hmm.
Tracy Cohen, she lays a lot out that you would find valuable. But this is actually another good transition into my next question. Talking about, oh, I want the house, but then not thinking about your retirement. What is like one big common mistake you find clients are making during the divorce with regard to their retirement plans?
Probably not thinking about the retirement plans and thinking about and just thinking about right now, right? What's going to make me happy right now versus kind of just thinking into the future, a few years from now, several years from now, what's going to be good for me later. And again, it's always that classic example of the house and just wanting to keep it because of all the memories and keeping a stable environment for your family and things like that. But there needs to be calculations put in place to make sure that the house is actually the right thing for you to keep or to be kept in general, or whether to be sold so that you are more financially stable later.
Yeah. And, part of as the divorce planner, part of my ethos is, look, there's an emotional side to the divorce process and there's a business side. The house, if you are in a position where you own a property together, a house, a townhouse, a condo, a farm, whatever it is, it can be emotionally triggering. So you're going to want to kind of separate the emotional response that you're having, really identify what is at the root of those things and separate it from, okay, is this a sound business decision for me to keep this asset? I love that you brought that up. For me, the biggest mistake that I see and that I'm always working with my coaching clients on and talking about ad nauseum on social media is people who have taken time out of the workforce to stay home. And the fact of the matter is, if you have been staying home to raise children, perhaps you've been working part-time, perhaps you haven't been able to because it's a lot of work, no matter how you cut it, you've taken time out of the workforce, and that's income you can't make up for. You've taken time out of the workforce building potential retirement funds, and all of that needs to be taken into consideration during the divorce negotiation process, because you can't go back and re-earn that. It's like you have to start from this point moving forward. And the whole crux of, retirement accounts is about compound growth, right?
Right.
Yeah.
Right. So yes, if you've been a stay-at-home parent, regardless of the reason, right? You are part of this relationship, part of this marriage together. So definitely stand up for yourself and get what you deserve. You put in the work too. Maybe you weren't earning money for it, but you put in a lot of work into this marriage, into this family, and you need to make sure that you are covering yourself so that you don't suffer in the future. Like, you did something for this family and you put in a lot of work. So make sure.
Yeah, and you will continue to.
Mm-hmm.
I think there's a false narrative out there of, oh, well, you don't have the same, value. in this dynamic because you didn't bring home a paycheck, which it's a false narrative, you guys. I know that, sometimes when people get to the point of divorce, maybe they're not in the best position in terms of communication and being respectful with the other spouse. And sometimes things are said almost kind of laying out, well, this is what it's going to be. It's not what it's going to be. Please, get your ducks in a row. Check my website, how to do that. And then take consultations with local divorce attorneys, and really understand your rights, because just because a spouse is something doesn't mean that's what it is.
You're no longer a team if you're getting divorced, right?
Yeah.
You're not necessarily enemies, but you're not playing for the same team anymore. So get separate representation, get another opinion. Their opinion doesn't have to be your opinion.
Yeah, no, I just got a great question in the chat, which is, and thank you for dropping it in, how does a stay-at-home mom pay for an attorney? Great question. And the truth of the matter is, it comes out of community funds. And to sentence, everything that you have during the duration of your marriage until you're divorced is community funds. It's for both parties. And if there's kind of more nuance to that question, if you're asking like, how do I do this discreetly, please drop that in. But otherwise, like, all the money is still family money until that judgment is signed and goes into effect. Okay, I hope that helps. I have another question, and we're going to be wrapping up. I like to keep these short and sweet, about 20-25 minutes. So if somebody has another question, please drop it in. But my big $1 million question is, like, when is the best time to engage a financial planner, a retirement specialist, if you're headed for a separation or a divorce, or just starting to think about it, or maybe it was just sprung on you?
Anytime is the right time, right? Even if you're super early in the process and you're just thinking it through, like, we are here to talk it through with you. I always joke that I'm more of a financial therapist, so I can talk about the emotional and the business side and help you divide, help you figure out what goes in each column.
Yeah.
Right. So I am there whenever you need. So don't feel like it's too late. If you're finishing up your divorce and you're almost done, but you feel like you need that extra guidance, that's a good time as any. And if you're still thinking about it and you're not sure if you've decided, I just had a conversation with someone about that phase of life too yesterday. So anytime is a good time.
I love that. And look, this is going to be a relationship. The idea is for you to find somebody that you are, creating a big plan for your life with in terms of your retirement. And it's somebody who is going to be a part of your team moving forward, right? I'm very, very lucky because I get to work with a great financial planner who I met during my divorce. And what was great about that person is it's kind of similar to finding who, the next question might be, how do you find the right fit? I put the same criteria to finding, the right financial planner, retirement specialist on my to-do list as I did of picking the right divorce attorney or a mediator, which is, there's some basic questions you want to go in. You want to make sure that the communication between the two of you really flows, that it's somebody that you feel you're going to get honest answers from. And also that tone, what is the tone? Because this is a real partnership, moving forward. And actually to that, Josephti, I have a question. I think there's this also common misconception that working with a retirement specialist, a financial planner, is reserved really for the 1%, for the most elite of the elite. And can you just dive in and tell us some of the realities of like more of the administrative stuff? How does that person get paid? How do you meet with that person? All that.
Okay. So I work with clients primarily in two ways in terms of payment, I guess, right? So that most financial planners, financial advisors, they manage the portfolios for their clients, and then they get paid through a percentage taken from that portfolio on an annual basis. And then I also work with other clients that are reestablishing themselves or maybe just need like a more short-term relationship. And then we just work for a flat fee for a certain period of time, say 6 months, where we're doing an intensive coaching session where we meet a couple times a month, give you some homework assignments, and then we reevaluate and just get like the list of stuff done that we come up with in the beginning. So it's not just for the uber rich. Everybody, when you're divorcing, everybody could use, I think, some assistance. It would be nice, right, to have someone to help you reestablish your financial footing and feel good about it, right?
Yeah.
New start. Yay. New start.
Get excited about creating that plan for your future. It feels good to kind of check that box and feel like, okay, I might feel a little precarious right now, but I know what the plan is and I work with somebody that can help me. Thank you for breaking down those two different options in terms of working together. My experience has been that it's really painless because the fees all come out of the account. I never have to pay somebody. It's like, you know, it's a really easy transaction. And I also want to go back to, you know, one of the places where Josephti had previously done a very long stint was at TIAA, just to underscore the fact that TIAA was created to make sure that teachers had pensions, right? So it's very much for anybody. This isn't like Succession, you know, we're not like, we're not flying on helicopters and landing on yachts in Italy. This is accessible for anyone. Well, to that, I just want to thank you so much for sharing your time and your expertise today. I'm going to have this conversation linked immediately after on my Instagram, YouTube, my blog, all over the place. So for anybody who jumped in and might have missed something, please go back and rewatch it. And I'll make sure to tag Josephti. If somebody wants to work with you, Josephti, how can they connect with you?
You can reach me, or you can find me on my website, which is The Wealth Garden, F as in Frank, S as in Sam.com. Or you could just look up my name, Josephti Cruz, because there's nobody with that name except me. So you'll easily find me. You search me on Google.
And thank you so much for always being game to jump on with me and do this. And I'm excited to kind of tease that Josephti and I will be doing a workshop early in 2024, I think in February, all about how to prep for divorce, as well as how to plan for your financial future and retirement, you know, before, during, and after, so that you have a kind of a sound plan moving forward. But Josephti, thank you so much. And thank you to everybody who joined us. Thank you, everybody.
Bye.